We want to bring in Eddie Ghabour. Eddie Ghabour got this right a couple of days ago on this program. You warned about a big sell-off coming, and we've got it right now. Why have we got this sell-off? Explain it to us.
So look, Stuart, as I've been trying to share with your viewers, and thank you again for those nice words, the market has been sending us signals before the Fed spoke. We've been watching the 10-year bond get lower and lower while the 2-year bond was going up. That's a warning sign. We've been seeing high-risk assets like crypto, small caps, and micro caps really sell off. So it starts to sell off at the margins first before it starts to hit the major indexes. That's why we've been selling high beta and buying lower risk stocks. And so what we're seeing right now is kind of a precursor of what we're going to see in a much bigger way next year. The Fed just told us, they gave us the answers to the test, Stuart. They're going to raise rates, they said maybe 3 times, and they're going to accelerate tightening. That is the complete opposite of what they did in the first 6 months of this year. And that's why risk assets went up. So when you transition and go into a tightening process as GDP is slowing down, and we firmly believe it's happening right now, the bond is giving you a clear signal that's happening. That's a recipe for disaster for high-risk stocks. Look at a day like today. The low beta ETF we've been rotating into, it's in all equities for that portion. It's down less than 0.5% today when there's a lot of other equities that are down huge. So I wouldn't panic right now as an investor if you didn't take advantage of what we thought the setup was. But the next time we get a rally, I think investors that have too much risk need to reevaluate what these signals are clearly telling you. We've done this for clients. And actually today we had such a nice cash position because we sold the RIP again on Wednesday. We actually added to mega cap tech this morning during the sell-off. We were able to do that because we were playing defense coming into this sell-off that we told your viewers about.
Okay, that's kind of short-term stuff, and you got it right. I understand that. What about going out into the first and second quarter of next year? You still think the market comes down or just plateaus and then comes down? Is that what we're looking at?
I think next year, I think it's going to be more down than up the first 6 months, Stuart. Again, I can't express this enough. We are slowing down economically. It's just not reflected in the numbers yet. So we are slowing down. And this drug that this economy has been on, which is this free money and buying our own bonds, it's being removed from this equation. And so, again, it's very, very clear that they're telling you what they're doing. And if you don't react to it, you know, you're going to get whipsawed in these high-risk assets. We are playing defense, defense, defense going into next year, because I think this is just the beginning of what we're going to see next year.
Well, we're glad you came back on the show. We're glad you got it right early, but we're not too keen on your forecast. But if that's the way you see it, that's the way you see it. Eddie, thank you very much for jumping on the show at short notice. We appreciate that. Thanks very much, sir.
Thank you, Stuart.
Well, you got it, man.